It's, at the end of the day, these are models. They are descriptors of the world. If they're not adequately addressing the way that people are experiencing their world, then I'm not going to yell at the people. I'm going to figure out what's wrong with my model.
Good morning or good evening, whenever you're joining us. I want to welcome my guest today, Mike Green, Chief Strategist at Simplify Funds and also author of the Yes, I Give a Fig Substack, which we're going to spend most of our time today discussing. I'm going to get started on, this obviously was an article that you wrote, Mike, because you're interested in the subject. I know I'm interested in the subject because I have kids who are either, in college or about to exit college or about to enter college. And I'm thinking very deeply about what their future looks like. I know you have children who are just a little ahead of mine. And I suspect that that was at least some of the catalyst for why you have an emotional stake in this that drives you to start thinking right about this. But and I know we both have a lot to say about it, and I can't wait to get to that. But one thing that I was surprised about is among all of the different comments on your piece was that you used LLMs to write it. So maybe first of all, I guess we're going to start with what exactly did you write about, and then we're going to sort of carve off a second to talk about how you used LLMs to write it, and then we'll get into the meat. So what was this piece about, first of all?
So yes, first of all, look, my blog, how I write, what I'm interested in. I write about things that interest me more than anything else, right? And obviously that includes markets, that includes topics that you hear me talk about all the time, the impact of passive investing on markets, but also things like interest rates, inflation, geopolitics, all things that are of interest to me, and that candidly, I'm very fortunate that my job and elements of my career allow me to have involvement in those areas. In this case, I actually was extending some analysis that had been done over the past couple of weeks, where I really started to look at this issue of, is life actually affordable? And candidly, it's a little bit of a shame on me, right? Because like many people who have a formal background in finance or economics, I immediately know what is meant when people say inflation, right? Inflation is the rate of change in the general price level. And so when the discussions around transitory inflation kicked in, it became very clear to me that that's actually exactly what we were experiencing, that it was a transitory inflation in which the CPI was going to retreat back towards a level that at least historically has been relatively low, and certainly nothing like what we've seen in, the 2022 to 2023 time period, really 21, 22. Um, Part of what happened as I went through that was realizing that what people are actually talking about is the price level, and they're talking about it for a very good reason, because they're underwater. And so inflation means something different if you are currently incapable of meeting your household's needs. It's an annoyance to somebody like myself who has enough income that I never really have to stop and say, can I buy this? Can I not buy this? There's lots of things my wife imposes that constraint on. But the simple reality is that I don't have to do it. I don't walk into the grocery store and say, gosh, I'd really like some ice cream, but it just doesn't fit in the family budget. I'm extraordinarily fortunate in that context. And so the price of ice cream going from $5 a half gallon to $5.50 or $6 a gallon half gallon doesn't meaningfully affect me in any real way. But for somebody who is at a point at which they're already making the sacrifices and giving stuff up, that incremental inflation, that 2 to 3%, particularly if they're not seeing it in their incomes as well, causes them to basically get further underwater, right? You're drowning faster, effectively. You have less hope of putting your head above water. And I think that was really kind of the breakthrough for me to understand that it is both level and rate of change that is really sitting at the core of a lot of the concerns that we have. As I dug into that a step further, and again, this is part of the LLM process, right? I don't have LLMs write things. It's not like I type in, hey, write me an essay on X, right? what I do is, and I've described it this way, and I think you do it in a very similar way, is I treat it as if I'm having a conversation with 15 to 20, first year analysts. Can they do good work for me? Can they gather information for me? If I send them in a purpose driven way to obtain X information and then present it to me, do I have the domain specific knowledge to be able to look at it and say, no, that's wrong. Let's try this again, right? Or let's look at it in a different way. Or what are the implications of this if this is correct versus if it's incorrect? That's how I use it. I've repeatedly emphasized this. I treat it effectively as if I have a staff of a nearly unlimited number of first year analysts who are very motivated, very articulate, very passionate in their work, and I don't trust them any further than I can throw them.
Yeah. I mean, the thing that I think a lot of people sort of get a little bit embarrassed about the idea that they're using LLMs to help with the writing. I'd say I'd probably go a little further than you. A lot of I mean, obviously you and I have written dozens, probably on the order of like over 100 articles or papers, et cetera, over our professional lifespan before LLMs came about, right? We know how to write,
Yep.
we know how to do analysis, we know how to check sources, we know how to run numbers, we know how to compute tables. Um, but LLMs have come far enough to be able to find credible sources, both primary and secondary. They've become very good at vetting one another. So have an LLM frame a thesis, have another LLM
Exactly.
steelman the counter
Yep.
argument, have
Yep.
another LLM synthesize, have build out a hardened thesis, correct it, get better sources, iterate, et cetera, improve the language, make it approachable, um, order citations, et cetera. Like there's an enormous number of different tasks that LLMs are very good at. Ultimately, I am scripting the narrative. I'm checking the points. I'm checking the sources. I'm making sure that the thesis is coherent, et cetera. Right. But as the LLMs get better and better, they become more and more useful. And we should be using them to improve our output in whichever way makes sense and actually does credibly improve our output. And I think it's silly that people, object so strongly and broadly to the use of this tool.
Well, look, I mean, first of all, it was a politically charged piece, and so people were going to react to it however they were going to. I've written something like 150 Substack posts since I launched my Substack. My Substack was a follow-on from a Medium platform, which in and of itself was a follow-on from an email chain that I had started when I launched a hedge fund in 2014, right? So I've written literally something in the neighborhood of 30,000 pages of documents over the course of the past, give or take 15 years. Um, and so, I just see them as productivity enhancing, exactly as you're describing. And that is exactly how I use it. I have a professional subscription to ChatGPT. I have a professional subscription to Gemini. I have a professional subscription to Claude. I fully understand that's not available to most people, right? It's
Yep.
something like $600 a month that I'm
Yep.
spending on LLMs at this point. And, I'm very, very fortunate to be in a position to be able to do that. But that's exactly how I use it, right? I will dump from one to the other and say, steelman this in the same way that I would say to a first year analyst, hey, take a look at Jim's work, before I really dig into it, could you offer any constructive criticism, et cetera? One of the benefits is I have yet to encounter an LLM that is secretly trying to sabotage the other LLMs, right? And I see that all the time in analyst communities where it's like, oh, yeah, well, Jim wrote this and this is obviously garbage, et cetera. Much more like the interaction that you tend to see on Twitter.
Hmm.
The LLMs actually tend to work together in a really positive manner.
Yep.
And, yes, part of that is they're fawning nature in which they're saying, "Oh, this is the most brilliant thing you've ever written," right? But the simple reality is that a first year analyst is going to say that too. Gosh, Mr. MD, you are the most wonderful, brilliant person I've ever met, right? I would never question anything that you say to me.
Yep.
It's the same phenomenon. We've been doing this for a long enough time that it's really not meaningfully different. And that obsequious behavior is in part designed to get you to use it more.
And also, I think first of all, the labs have done a really good job of mediating that sycophantic orientation. Like the new Gemini 3
Oh,
pushes back
I
on it all the
actually
time.
enhance that feature on mine. I make sure they
Me
turn it
too.
up. It's really
Yeah.
the only person who says you're brilliant anymore.
Absolutely. And the thinking models also do a much better job of pushing back and avoiding sycophancy. But I mean,
Yeah,
yeah, you've got to be aware of
I
our challenges.
yeah, no, you have to be aware of their limitations. You have to be aware that they will make mistakes. You have to acknowledge that you will make mistakes, right?
Hmm.
And
Yep.
this is one of the weird things about this experience is it doesn't seem to matter how many times I say, yeah, look, this is directionally correct. I don't think it's the right answer. It's meant to spur discussion, et cetera. It's like, oh, see, he's admitting he's lied. It's like, okay, I don't quite think that's the translation, but fine. If that's
Yeah.
really where you want to end up, that's okay. And I just end up muting most of those guys eventually, and then we move on.
Yeah. Yeah. Awesome. All right. Well, let's sort of dig into the series itself. And I actually would argue that the series starts with the piece you wrote about the mockery machine.
Yeah,
I
yeah.
think that's actually the perfect frame for this. So what was that about? Because I think that sets up the rest of this conversation.
Well, so that piece was in reaction to a very coordinated mocking campaign that came in response to a quote unquote right wing influencer who made the simple observation in the 1950s, a single income could afford X, right? And it was a house that was too nice, etc. But it spawned this incredible coordinated response that, like, you literally could not have imagined a more plan, whether it was planned truly or whether it was simply a, hey, look at this silliness. We can all pile on and show we're parts of the tribe, right? And that's what happened. It literally turned into this, complete dismissal of the message in exchange for various, absurdisms of, well, in the 1970s, a peanut farmer could afford this house, right? And of course, it's the White House, right? And my
This-
observation is, well, that actually did happen, but it is a very, very sad thing for me to see the financial Twitter community basically move into this, suppression mode, the mockery machine, in which it's designed to take what is a legitimate observation, life or the basic necessities of life for most people in the middle class were eminently more affordable in prior periods. Things could be done on a single income that freed mothers to stay at home to raise their children. Communities were richer because of that presence in the local community in which both parents were present, children were playing in the streets, et cetera. These are all wonderful things that we remember and we experience. You and I probably experienced these firsthand. Um, to lose that in, this coordinated mockery as compared to a thoughtful evaluation of what are they actually saying, what are they experiencing, et cetera, that for me is where I've always actually found the most interesting opportunities, right? You know this in my work around passive. I was a value investor. I thought all people were thinking in terms of discounted cash flow models and building reasonable projections of how things should work, et cetera. And somewhere around 2016, the scales fell from my eyes, and I discovered that that wasn't actually the case. And that's been a very, very fruitful avenue of exploration. As I dug into this problem, I found that it was very similar. That one of the real challenges we have in economics is our concept of, uh, homo economus rationalis, right? The idea that everybody is totally rational in their behaviors, and we can break it all down to NPV calculations and all this sort of stuff. That school of thought seems to pretty much be in the camp right now. If we just tell people how good it is, eventually they'll believe us. And what I actually think we're experiencing is the same phenomenon that in many ways leads me to be very critical of behavioral finance or many other schools of thought, which is by trying to shoehorn people into, well, let's just show them the facts, as compared to considering, well, maybe our facts don't actually align with what they think they do, is to me one of the most powerful questions you can ask, right? It's, at the end of the day, these are models, they're descriptors of the world. If they're not adequately addressing the way that people are experiencing their world, then I'm not going to yell at the people. I'm going to figure out what's wrong with my model.
Yeah, I mean, I think something that you've done a good job of highlighting throughout the whole series is that there are definitions that we establish at certain points in time that then become antiquated. One of the things that I think you may have invoked for effect, but which ended up being the thing that everybody seemed to focus on, or at least everybody in sort of the classic economic establishment seemed to focus on, was the word poverty, right? Or
Yep.
poverty line, right? You sort of said $140,000 was a new poverty line. And, I came out and said, look, I'm not sure that was like Mike is not making a technical point about the poverty line in the way that the poverty line was defined in the 1960s, but is rather using it sort of as a jumping off point for a broader concept of the middle income being a lot more
Yep.
precariously positioned economically than the establishment. Then we have good metrics to describe using normal economic terms, right? And so the economic establishment ends up gaslighting people that are at this precarious end
Mhm.
of just at the verge of being on the middle class and then considering having children or considering having more children and realizing actually that that's out of reach or the sacrifices required both for the children that you're having and you as a person are so substantial that you can't make the math work, right? So did you find that people kind of mischaracterized or zeroed in on really technical details and missed kind of the forest for the trees a bit?
Well, I mean, look, so first of all, you, among very few others, hit on what I think is the single most important point that comes out of this experience, which is the ghost households. Effectively, the households that do not form, that choose not to have multiple children, that choose not to engage in those next stage of life choices that are happening because they simply don't have enough money, right? And so my work was very specifically focused on if you are a family of four with two earners and two kids, here's what this world looks like, right? Now, that was presented in all sorts of different ways, right? Well, that's not descriptive of the average household. Well, no, of course it's not. It's descriptive of a two earner, two child household, right? And then I introduced the idea of like, look, the poverty line is set at 30,000. The median household is around 80,000. So you would think that that indicates you're very well off, and you and your spouse would look at each other and say, okay, we're ready for that next step. Let's have a kid, right? Let's have two kids. And the simple reality is if you're doing the calculus at that point, your answer is, I can't, right? I can't do it because having kids doesn't magically make me more money, right? I have to make the money in order to make it past that point. And historically, that's not how families worked. I had my first child at 29 years old. I had some money. I certainly didn't have anywhere near as much as I have today. And my wife and I had to seriously sit down and say, what does our budget look like? Can we pull this off? Can we buy a house sooner than we thought we were going to? Can we move from a carefree, existence where it's just two people who are now cohabiting and reducing our living expenses to a world in which suddenly we've got lives that are dependent on us? That was a choice that we made. We did the calculus and we said, we can do this. I think what you and I are both identifying this is more and more young people are looking at this and saying, I can't do this.
Yeah, absolutely. I mean, I've been thinking about this in the context of my own children and their futures. Um, for over a decade, really, as they began to approach high school and into university, and also as the world began to really change. As housing prices got really unaffordable in major urban centers, where I assumed that they would want to live for interesting work and great job opportunities. And it's become increasingly clear to me that there's a fork in the road that I'm not sure was nearly as explicit when we were having to make the same choices. And that is that you can genuinely live an extremely materially fruitful, carefree existence um, in the modern world if you decide that you don't want to have children, right? You can stay in a fairly small place. You can live in a great city, take advantage of all of the lifestyle options for eating out and theater and travel, being near international airports, et cetera. Um, and if you want to sort of opt out of that rat race, you can move to, Goa, India with an internet connection and do gig work for 25 years. And all of these are very viable options as long as you don't want to have children. But the second that you want to have children, all of the calculus changes. You now need to think about having a home that's large enough to house them in a neighborhood that's safe enough for them to go outside and near a district with a decent school. You need to think about childcare, or, the balance of spouse working or not, and the extra costs of that, and all of the, saving for education, which the cost of education has gone up at a much higher rate than the cost of TVs or seats on airplanes, et cetera. And so, we're not calculating in any of our statistics the fact that there is this fork in the road. And I think all of our statistics are kind of focused on, well, can a person live a nice lifestyle with no other responsibilities? But once you add in these other ambitions, which I think we would both argue are extreme positives for the future of society, then things get almost impossible. Is that what you were sort of seeing as your kids were getting older? And
Yeah, no, absolutely. So my kids, as you pointed out, are a little bit older. My oldest son is 25 years old. He's had a successful career by any reasonable metric. He works at a financial services firm, has his own place, is doing very well, and candidly is personally past the point that would require any form of precarity to his existence, in addition to having support from the bank of mom and dad, right? The reality is he will never know poverty, right? I grew up in significantly more difficult circumstances. My parents largely shielded me from the consequences of that, but they also made extraordinary sacrifices to give me an education that was far above what I deserved, quote unquote, given my family's income and the area that I lived in. There were extraordinary sacrifices that, as I indicated in my first piece, I actually partially credit for driving my mother to the point that she ultimately became clinically insane. The stresses of doing that were really unfortunate. And some of my opponents might argue that I'm clinically insane, and so maybe there's just a genetic predisposition to this. But the reality is as I look at my children and I look at the lives that they would like to live, um, they and their friends are facing challenges that didn't really exist for you and I. And you nailed it when you said this is a societal good. People choosing to have children is ultimately what generates our future taxpayers, is what generates our future doctors and lawyers and teachers, all the people that are ultimately necessary to create functioning societies going forward. So we can either live in this kind of, millennial fantasy. And by millennial, I don't mean millennials. I mean like millennialism, right? It's the end times, right? This is the last, human existence. And then we're going to be taken over by robot overlords. Well, man, that's a terrible philosophy to approach life with, right? It could be true, and that would be catastrophic, and it would make me extraordinarily sad. But you know what will actually help us not make those choices? Raising kids who actually have a sense of what the world should be.
yeah, no, exactly. And I that's why I was so disappointed with the vector of attack on your piece, and any follow-ups. There seemed to be a coordinated blindness to the objective of the writing. I mean, keep in mind, right? Nobody writes a Substack assuming that every one of their pieces is going to go massively viral and need to be defended against all of the top, people in the field that your piece is adjacent to, right? I imagine your process is a little bit like mine. Like, okay, I've committed to writing a piece every week. I'm going to write about this week because I'm curious about what the math looks like. I have a day job. I'm curious. I'm interested. I'm going to do my best with the time I'm allotting to this to put a piece together. I'm going to give it a title that has a chance of attracting some attention and engagement, and I'm going to do my best, right? And then you're not you're not writing a technical, um, a major
No,
technical
it's
white
not. It's
paper,
it's not a
right?
research paper, right? It's not a
Right,
white paper. I am not trying to, produce something that is going to hold up to doctoral level dissertation defense, standards.
right.
Now that can be interpreted in any number of ways, and I think those who have chosen to treat it um, uncharitably, which is unfortunately a word I've been learning more and more, because there is really a degree of charity that you should bring to any reading. You know, it seems that many people have decided that, I decided to make it $140,000 because that would have attracted more attention, right? Like, in all seriousness, if I'd said $1,000,000, would that have gotten more attention? Feels like that would have probably been dismissed as completely absurd and nobody would have actually paid attention to it, right? If I'd said $65,000, would that have gotten a lot of attention? That's twice the existing poverty line, right? The reality is, I didn't pick a number to try to generate interest. I picked a number that actually reflected the analysis that I had
Right.
done. And as I indicated in the piece, I was as surprised as anyone. What was really amazing about it was the people responding across multiple platforms, the Washington Post, the Free Press, my Substack, etc. Twitter, for that matter. If you actually look at the vast majority of comments, Instagram, which is now taken off, radio programs, etc. The listeners who are calling in, I've been privileged to listen to people talk to this, and they literally are saying exactly what I think got Trump elected in 2016. I feel seen. Oh my gosh,
Right.
somebody actually understands what I'm going through.
Right.
Sorry to interrupt, but I did want to take a quick second to remind listeners that while we do absolutely love providing our audience with world-class guests and weekly investment insights, we wanted to remind you that we actually do our best work outside of this podcast. And we try to do this by providing cutting-edge, globally diversified, and systematic investment strategies that are designed to be broadly non-correlated to traditional equity and bond portfolios. So we actually manage private and public funds, as well as bespoke, separately managed accounts for investors that seek the potential to smooth out portfolio returns in the long run. So if you do want to see that theory that we've been talking about put into practice, please do go ahead and check us out at investorsolve.com. Now back to the podcast.
Yeah. No, I mean, so I guess that's the populist angle that some of your interlocutors latched onto, right? That you seem to have connected with what, Kyla has maybe called kind of the vibe session or vibes or what have you. And there seems to be like a complete dismissal of that reality, right? Because it's not well defined using the terms and the frame of, let's call it neoclassical economics or like the dominant economic canon, right? We're sort of we're fumbling around a little bit at the edges. We're maybe I'd like to think that maybe you used like poverty line as a little bit
Well,
of a
to be very
foil.
clear, for me, poverty line means something very specific to me. It is the transition to middle class, right? That is really what it indicated to me, is at what point would we actually accept that people are starting to become middle class? Now, there is a component of fatuousness to that, right? Or arbitrariness, as some of my uh, haters have, perhaps labeled it. The reality is it is arbitrary, right? What is the poverty line? Historically, it was set at a level at which 20% of the population was, quote unquote, the poverty line. We then evaluate that over time. Well, it is totally arbitrary to pick whatever point in time that is. And it's particularly arbitrary to treat it as an absolute level of outcome. Poverty will always be a relative concept. And so to say something like poverty used to be 20%, but now it's 11%, well, that doesn't actually mean anything. What you're really saying is the quality of life of people, when it was 20%, 10% of them now have a meaningfully higher quality of life as measured by CPI versus that number, right? That's what we're really saying. And I'll fully concede that. But I also think that it's really important for people to understand that these quote unquote sophisticated economic arguments that are being made are actually not at all sophisticated, because their response is basically, well, sure, it used to be done that way, but then we started updating it with CPI. Right? CPI is, we have multiple CPIs. We have CPIs for wage earners. We have CPI for urban consumers. We have CPI for the elderly. We have CPI for people of certain races. We have CPI for different household sizes, et cetera, right? The reality is that CPI as an aggregate describes the purchasing pattern and behavior of a large aggregate group. It does not describe the behavior that is experienced by people who are at the poverty line. And people at the poverty line have the least amount of choice. They don't get to wait for the tires to go on sale because they've driven their car with the tires to the point that it's so worn down that they're going to fail inspection if they don't replace the tires. If they fail inspection, they're going to lose their job because they can't get to work, right? So they don't have the luxury of making the choices and doing the extended shopping pattern, et cetera, that I, as a man, love doing, right? I mean, Amazon is my jam, right? I can be on Amazon for hours and find all sorts of stuff and put it in my basket and wait until it goes on sale and do all these sorts of things. Those are behaviors that are engendered by surplus. I don't really need anything, right?
Yep.
So everything is kind of a luxury for me and I can spend time shopping for it. Within the CPI itself, the vast majority of the deflationary goods and services that we experience were prior luxuries that over time become part of the standard basket. Right now, the way the CPI handles that, the way the BLS handles it, is it shows the aggregate price level lowered by the contribution of declining prices from those goods and services. But the reality is they weren't part of the poor person's, the stressed financial condition individuals' purchasing basket, and so they didn't benefit from that price decrease, right? This is most egregious in things like housing, in which people will point out and say, look, houses are 50% larger today. Well, we also simultaneously have articles in the New York Times that are highlighting the fact that we no longer have SROs, standing room only hotels, where people could rent a single room without a kitchen, et cetera. Why? Because we made them illegal, right? So it's all well and good to say the quality of your living conditions and the quality of your living conditions have improved because of the innovations that we've had, et cetera. But if we've simultaneously removed choice from that, that's not a net gain for that consumer, right? It's simply a statement of what everybody else has experienced. And so it's not appropriate for discounting for those purposes. And by doing it in that manner, we've led to a poverty line that is so far below reality for most people. At $32,000 for a family of four with two earners, it doesn't even cover the childcare budget, I'm sorry, for a family that is really trying to make it work. Right, and
Yeah.
that
I
was
mean, I
the
think
other really revealing thing, right, is just how out of touch many young people and older people were on the childcare component. That was the one that should have really clued people in, right? Because the number I came up with is $32,000 for two children. All sorts of people said, well, the BLS says the average is 16,000. Yeah, but that's because it's for one child, right? And it's also across multiple households and everybody's different experience, et cetera. You actually dig in, you look at the data, between 20 and 40% of young families' income is being spent on childcare. That was like that. It's just not. I can't even begin to tell you how unthinkable that number would have been to my parents.
Mhm. Yeah. I just think it's really useful to try and distinguish between the like a poverty line as being the level below which a person cannot afford the items in Maslow's first layer of
Yep.
his pyramid, right? Like you can't afford sufficient nutritional content. You can't afford um, safe shelter, right?
Yep.
Like literally, this is like the subsistence line where your health is deteriorating by the day because you just can't afford the very basic inputs to life to sustain your own health and safety, right? And so I think like it's fine for lifetime economists to dig in on the fact that look, we have an established definition. You need to read the term sheet. The poverty line is the level of subsistence. You invoked the poverty line, and now I'm going to take a hard stance on the poverty line. Like I just think it's worth, for the sake of being able to kind of have constructive discourse, it's worth kind of letting go of this poverty line as being the most important term that we're going to
I,
focus on
yeah,
and try to focus on something else. I proposed the precarity line. That's
I agree.
probably not a good one either. I'm sure someone come up with something, but it's really like the point at which you can realistically hope to reach for the very first rung of the social ladder, or reach for, or have the potential or optimistic vision of grasping something that approximates what we might have defined as the American dream 25 or 30 years ago,
I
And
don't even think it's 25 or 30 years ago, right? I mean, so the title of my next piece is called "The Pursuit of Happiness," right? And it refers to the very intentional choice that Jefferson made to replace Locke's life, liberty, and property with life, liberty, and the pursuit of happiness. What he meant by that, right? Remember, this is a scholar of ancient Greece. What he meant by that was the Greek term eudaima, I believe it's pronounced, that means your life's aspirations, right? To fulfill your life, right? Not like, how are you feeling today? Oh, I'm happy. Oh, good. Thomas Jefferson must be really thrilled, right? No, it means to actually meet your life's objectives, to have a fulfilling life. And people that are at that precarity line, that as I've, sought for ways to describe it, it's that feeling where you're barely holding on by your fingernails, right? And, the fireman can say to you, like, are you okay? You're like, yeah, I'm okay, but I could really use a little help here, right?
yeah,
And escaping that is a precondition for even beginning to think about achieving those life's objectives. And what we know across our society is that among those things are getting married, having children, creating a future, right? And unfortunately, we're creating conditions under which more and more young people are not making those choices. And they're not making them because they lack the systems and resources, and they see the societal lack of support and disdain for it, candidly,
mhm,
right? And then they're confronted with people basically saying, well, I made it work. You can make it work. Kids just complain, right?
right.
This is the least thankful group, that, the whiniest group in the history of the world. Really?
Yep.
Coming from the baby boomers? Really? Come on.
Yeah, it's this mass gaslighting exercise, which I'm just constantly in awe of. It's amazing. But one of the things too that I think is not well either understood or documented by economists, um, is so part of the CPI basket is this idea of substitution, right?
Well,
So
interestingly enough, the CPI basket doesn't have direct substitution. It has substitution that kicks in. It used to be every 2 years. Now they've shortened it to every year. But it is a fixed basket, which is one of the reasons why it runs hotter than PCE
mm,
traditionally, because PCE allows you in real time to say, well, beef went on sale this week, and therefore I'm going to buy X quantity of beef, or food fell relative to gasoline. Therefore, I'm going to make fewer trips to the store. I'll buy more when I'm at the store, and I'll eat a little bit larger, right?
right,
Those are captured in the PC. That type of substitution exists in the PC as distinct from the CPI. It's one of the reasons why PCE tends to run a little bit lower than CPI does.
right. But the CPI does capture those effects. It's
Well,
just a little bit
over
slower
an
and a little bit.
extended period of right, over an
Yeah.
extended period of time. And this is again one of these things that, you see these sophisticated responses. They will highlight papers that say something along the lines of, the consumption basket of the poor has been far more smooth than the income basket of the poor. Well, one, that's simply saying in many situations they have access to credit, or they have access to drawing down their savings. This is particularly true when you start talking about the older poor who have accumulated resources and savings that they dissave in order to produce their consumption baskets. But it's a very disingenuous approach when you think about a young family, right, who is trying to gain access to credit, often already credit constrained by things like student loans, et cetera, right, to turn around and say, oh, well, they should just smooth their consumption over time by taking on debt. They're doing everything they can to make things work as it exists. Debt introduces the risk that if you made a mistake, if you lose your job, et cetera, you get basically sent to jail in the monopoly game for a period of up to 7 years. And for many people, that's just not something they can do.
Yeah, I guess where I was trying to go with that, I totally acknowledge all that. The other angle I was trying to take with this was that, there's this in the PCE basket or in CPI with different lags, there's this idea that you're a family of four there's going to be expenses on childcare, expenses on housing, expenses on health insurance, expenses on saving for college, et cetera. If one of these things gets expensive, you're going to substitute out, right? You're going to spend less on childcare and more on housing, or you're going to spend, less on health insurance and more on childcare or whatever. And what seems to be lost is that no, this comes as a bundle, right? If you're a
Yeah.
family, there's no substitution here. You need all of these things, and you need all of them at the same time up against a biological clock that does not wait for you to get wealthier or make different choices.
Yeah, no, I think that's absolutely correct. And I think that is part of what is underappreciated in economics, right? This falls into the category of the ergodic versus non-ergodic framework, right? If we take the average across everybody in our society, it is somewhat predictable what you're going to do at 32. It's highly unpredictable what you as an individual are going to do at 32, right? This is the genius behind residential mortgage-backed securities, ABS, et cetera. We recognize that we can combine any number of individuals and their properties. And if we combine them together into an actual financial security, it does behave with statistical properties, right?
Right.
That's super valuable.
Yeah.
But that's not how people live their lives, right? People have roughly a 15-year fertility window. Women in particular have roughly a 15-year fertility window in which they have to simultaneously find the right mate, right? Achieve enough wealth to be able to put themselves into a secure and stable place, achieve a degree of career that allows them to either take time off or to work from home, which requires a degree of professional capability that is increasingly challenged in a move away from the work from home world, et cetera. Right? These are all realities that are faced that don't seem like that big of a deal when you're a 55-year-old multimillionaire. But if you're a 28-year-old, it's a really big deal. And
Mhm.
it's a very serious question that, if they don't have the answer to it for 10 years, what can they do? They can have at most one child. At most.
Or not even,
Or not even.
you can't
Because
afford
to
a
your
child, so you substitute a dog. You can't afford a dog, so you substitute a phone. Like, it's just
Yep,
this constant, you know,
downgrading.
dilution of life,
Yep.
but
Yeah.
none of which is captured in the CPI or the PCE basket, and none of which is in any way that I could tell addressed by the many, tier one economists that weighed in on the point
It
that
it
you're
it it
you're
it
trying to make.
wasn't remotely addressed, and part of that is because economics has locked itself into this frame of rationality, right? Everybody should behave in X rational fashion. I believe it was Europeans that actually brought up the revealed preferences, right? This
Yeah.
idea that, somehow or another, if I choose not to have kids, well, then I value my lifestyle more than my children. Well, again, to your point, right? There's this giant package out there that, as we calculated, and I think your numbers roughly agree with mine, is somewhere around $50,000 the minute you decide that you're going to start having kids.
Mhm.
If you don't have access to parents or to a superlative career that can allow you to finance that $50,000, there's no amount of revealed preference that is actually occurring there. It's simply the reality of I can't drive somewhere because the car doesn't start. Right? It's not that I wanted to walk. It's not that I wanted to do these things, et cetera. The
Yep.
second component, and again, this goes back to the construction of the CPI. Like, just think about the reality. The way we measure housing costs for the BLS and CPI is we treat quality improvements as a reduction in price.
Right.
So if I'm a person looking for the cheapest apartment in the period in which air conditioning is becoming widely distributed, the cheapest apartment is actually going to be slightly cheaper than it otherwise would be because people will look at an apartment without air conditioning and say, well, I don't necessarily want that. That makes it more available for poor people. But as every new apartment has air conditioning, eventually that arbitrage disappears. And as a poor person, you're suddenly told by the government, well, you didn't actually pay more for the place. It's just that the place got better,
Yeah, so
right?
I think it's worth actually digging into using an example here, right? I think
Sure.
we could do with cars or we could do with apartments. I think maybe the apartment with air conditioning is actually really good because the chaining of the rates makes a huge difference here, right? So,
Yep.
we introduce an air conditioner unit to an apartment. The apartment was originally $100 a month to rent. It's now $110 a month to rent. But when the BLS measures the increase in the price of that apartment, they say, well, yeah, the apartment went up by $10 a month in rent, but it's a much better apartment. So we're going to
Yep.
deflate the increase in that price by some amount that is going to reflect the difference between an air conditioned apartment and a non-air conditioned apartment. And so in fact, that apartment did go up by $10 a month, but the BLS only measures it as a $5 increase, for example. And importantly, that is now embedded in that monthly CPI increase forever and is used against it for compounding purposes. And that true increase in the price is lost forever.
Well, it actually goes even further than that. So, one of the pieces that was cited by one of the economists, Jeremy Orpidal, and I believe it was mentioned by Scott Winship and Tyler Cowen as well, is this focus on consumption baskets, right?
Mhm.
And what's amazing about that is that they used what's called the CPI RSE to determine that, right? This is an experimental series that effectively says if we were to take all of these improvements and carry them all the way back through time, right? What would we actually see as the consumption basket? And unsurprisingly, if you restate CPI to incorporate all of the qualitative improvements that have occurred over time, it's going to say things were much more expensive in the past, right? Because they didn't have that quality component to it. Now, the cash expenditure is the same,
Mhm.
right? And then almost certainly higher because of nominal depreciation, but this, debasement, right? Traditional inflation. But the reality is that they're now looking at it and they're like, oh, look how much richer all these people are than they used to be. And those people are gone, what are you talking about? I can't save 2 nickels.
Yeah, I mean, look, I think it's important for us to acknowledge that when everybody gets an air conditioner, everyone's quality of life improves. And not only the quality of life, but also your ability to concentrate for longer over homework and therefore have higher achievements in school and get a better sleep and do better in sports the next like there's all sorts of societal benefits. There's improvements in car tech for safety standards. Like you look around, having a supercomputer in your pocket is unbelievable. Like all our quality of life in general, there's no question it has improved. That can be true at the same time that we acknowledge that you can no longer buy a home or make a decision about whether you want to own a home with air conditioning or not, or own a car that doesn't have LiDAR and a backup camera and et cetera, et cetera, et cetera. And yes, the cars have gotten much better and safer, but you also have to pay more for them, and you have to pay more for them than the marginal increase you've gotten in your pay for the median earner. And it's the same for housing, et cetera. Like it's just there are all these moving parts. That there's no conspiracy at the BLS, though I do think there is a bit of a conspiracy among certain schools of economists who try to use chain CPI to make policy assertions that the CPI is not designed to support, right? And I think a lot of this comes down to that dissonance.
Yeah, no, I think that's right. And again, in revealed preferences, though many of those who objected to my piece very loudly, what they're really saying is this is scary because this opens up the avenue of progressive taxation that we might get charged for fixing this. That's really what they're scared of. And to be totally clear, right? And I try to convey this. I am an economic conservative. I am also scared of opening up the populist framework in which we decide, well, we just need to take a little bit more from the rich people and the rest of us can have everything we want. It doesn't work that way. We know that. That's not the right approach. But that doesn't mean that the right approach is to lie to the people who are struggling and say, you've never had it so good, right? And if you don't do exactly what we tell you to do and you don't do it with a smile on your face, we can make it so much worse, which is the implicit threat that's effectively being levied at them. The
Right.
reaction to Mandami is not a soul searching that says, how could we have allowed conditions to deteriorate under which people would respond in this way, that they would make this choice that seems so clearly economically disadvantageous,
Mhm.
right? Instead, we're like locked in this framework that says something along the lines of, gosh, all these people are so stupid. we should really be giving people more freedom, but not those people.
Right, exactly. And the consequence of that is we're just externalizing what might have been an economic cost into now a political cost. And it's going to be like I think Mondani is symptomatic and also is forecasting a trajectory of political opinion, right? Where, if you're going to continue to gaslight a sufficient proportion of the population into, into telling them that their lived experience reflects their own inability to understand reality rather than acknowledging that there are elements of their lived experience that are not well captured by the economic paradigm that drives policy, then we're going to continue to drive more and more people into disenfranchisement, and they're going to go looking for alternatives. And we have simultaneously told all these people that what we currently practice is, democratic capitalism. And so they point at what they were told as democratic capitalism and say, well, this doesn't serve me, so I reject democratic capitalism. What is the opposite of democratic capitalism? Socialism. So I'm going to go for socialism. Instead of realizing that what we have is nothing like democratic capitalism,
Right.
that they're pointing the finger at crony capitalism. And now instead of saying what I actually want is democratic capitalism, they're saying I want socialism because they've got a complete misapprehension of the dimensions of the political economy.
Yeah, again, like in my piece, I make liberal use of references to Ayn Rand and to Animal Farm and all of these components. I think, one of the things that to me is so shocking is that those on the left and the right seem increasingly unaware of the consequences of the message that they are sending, right? On both sides, they are effectively using the
Absolutely.
Klaus, whatever his name was, you'll own nothing and be happy, right?
Yep.
Again, go back to Jefferson. What did happiness mean to him? Happiness meant fulfilling life, right? Meeting your life's objectives. And I'm sorry, but you don't meet your life's objectives by, really, really struggling to get to work. That doesn't make you happier. That doesn't fulfill your life objective. Nobody wakes up as a 3-year-old and says, you know what I really want to do is make sure that I, fight all the slings and arrows that are required, the, hail, sleet, snow, whatever the mailman used to confront, right? So that I can get to work. That's absurd. That's not what people want out of life. And by the way, part of the problem is we gave it to them for 2 years. This is one of the things that was really
Right.
shocking to
They
me
had
to
a taste.
realize is that you can't explain the dramatic increase in savings by the relatively modest, and I understand that they don't feel that way, but they were relatively modest stimulus payments. The vast majority of the stimulus payments went in the form of the Paycheck Protection Program and the employee retention credits, which were used to keep you in your job. But the actual stimulus that was sent to households isn't what drove the savings. What drove the savings was you didn't need childcare, and you didn't need as much transportation, and you didn't need to clean your clothes nearly as much. You didn't need to wear nicer clothes to work. You could show up in pajamas basically over Zoom as long as you, quote unquote, had on a tie. All of these things exposed Americans to lifestyles that candidly you and I have led for an extended period of time. I haven't worked in an office since I think it was 2019.
Yep.
Right. And, my life consists of hotel rooms, trains, planes, automobiles, various, luxurious destinations around the globe, et cetera. And at each point, I'm able to say, you know what, I can just hop onto the computer and do the work that I'm required to do. Right. Americans had a taste of that, and now it's being taken away. And people are saying, wait a second, I'm incurring all of these incremental costs that went away for a brief period of time. And by the way, they're inflated by 20% versus what I remember.
Mm-hmm.
No wonder people are angry and frustrated and giving us very poor scores in terms of sentiment and perception for personal outlook and perception for the country. And this is one of the things that I find so frustrating. I mean, again, one of my challengers in this debate, has made a big deal of the fact that things really haven't deteriorated nearly as much as people think, right? If I look at the difference in individual happiness and satisfaction scores versus country satisfaction and scores, we don't see anywhere near the drop, right? Well, I'm sorry, that's a category error. We actually know that we have two separate distributions with different means and different standard deviations, right? You don't solve the two-axis, chart complaint by saying, well, we're just going to put them both on the same axis and treat them as if they're the identical data sets, right? They're not identical data sets. They have to be characterized by their own components. If we do something like convert those to Z-scores against their own populations, people are just as depressed about their own outlook as they are about the country, and it's matched perfectly against the consumer sentiment scores that we're getting from polling entities like the University of Michigan, right? These are simply untrue representations that they're trying to convey to people, and there will be a cost that likely manifests itself in something like a Democratic sweep or a Mamdani takeover, in which these people will then be able to comfort themselves with their political views and say, well, it wasn't happening under my watch. No, it did happen under your watch.
Right.
You failed to create the alternative.
Yep. No, totally agree. Another thing that is ignored by economists is, and it's a strange thing where we have a whole canon or school of economic thought where everything should be market priced, right? Which is kind of the neoclassical view, right? And yet you've got all these off balance sheet liabilities, or which are externalities, really, right? So, you know, childcare would be a lot more expensive if you didn't have a bunch of families that were able to lean on aunts, uncles, moms, dads to take on a substantial portion, if not all, of that childcare responsibility to free up two adults in a household to go and make an income to support the house and healthcare costs, for example, and other ancillaries that are required for a family of four, right? And so, first of all, this is externalized, not captured in any of the economic indices. It's a very meaningful proportion of the total economy, but it also shifts the demand curve to the left, right? And therefore shifts the price of this commodity of childcare to the left. We're underpricing the actual cost of this really important dimension of having children in the modern context because we happen to have, a generation who's able to take on some of this responsibility. It's not costless to that generation. It's not costless to the current generation, and it's not counted as a cost anywhere in the aggregates.
Well, again, this is one of these things where perversely what we actually have is subsidies for those who are at the very, very low end. So they have lower incentives to build those extended family networks that could actually contribute to normative behavior and better outcomes overall, right? Single mothers, children born out of wedlock, et cetera, continue to grow as a proportion of our society. And part of that is because we subsidize those behaviors. That's obviously not helpful, but we also have to recognize that, at some point you do put a tourniquet on somebody who's bleeding to death, right? Like the objective is not to really force them into destitution and absolute poverty. And by the way, if that is your objective, if your view is, well, there is, that's not real poverty. You should have seen poverty in the 16th century, right? I mean,
Right.
this was an explicit part of the discussion that crept in from, well-traveled, world famous economists, right? If you think that's poverty, you've never been to Guatemala, right? Well, first, I have been to Guatemala, and I understand that there are degrees of poverty. I've also been to Africa and India, et cetera. So, like, I understand there is far worse outcomes than being in Cleveland, for example. But the simple reality is that's a choice that we're making to define it that way. And I don't see where anyone gets off and basically saying, well, you're not really poor. I remember poor. Poor when I was a kid meant you didn't, you had to sell your teeth in order to afford things. And that's true, by the way. There were people who got by selling their ivory teeth to wealthier individuals. But man, I don't want to go back to that. I don't want anyone to go back to that. That's completely absurd.
Yeah, exactly. So we haven't really spent a lot of time. I didn't really spend any time in my follow-up piece, so I haven't even published yet. But you haven't yet gotten to the point where you are proposing some kind of loose framework for how some of these imbalances or structural issues can be addressed. One of the things you did highlight was the tax, the odd tax structure with this sort of
Yeah.
Death Valley, I think you called it. So, like, what is the Death Valley, first of all, and then we can sort of talk about other paths
Yeah,
forward.
the valley of death, as I define it, or other people
Mm.
refer to it as the benefits cliff, right? Is the point at which you start making enough money that the government starts withdrawing the benefits that you're receiving, food subsidies in the form of SNAP or EBT, childcare subsidies, Section 8 housing, reduced price lunch, et cetera. All of these are resources that you benefit from when you are quote unquote officially poor. As you move away from that level of officially poor, those benefits start to be withdrawn, which creates a need to replace them out of cash income. And as a result, you don't actually save, right? That level of 100 to 140,000 is really basically the calculation at the point at which you can say, okay, this person should actually begin, should be capable of beginning to save towards college educations, towards their retirements, et cetera. Um, that's really what that line means, right? In my analysis, again, I think you framed it beautifully by using the term precarity. It's the point at which I can put a little bit aside for next month, right? And if I don't touch it next month, then I'm going to set even more aside for the month after that. And eventually I build up a cushion of safety that allows me to say, maybe I'll engage in an entrepreneurial venture. Maybe I'll go on vacation. Maybe I'll do X, Y, Z, right? All things that add to the richness of life and allow you to get closer to that point of achieving happiness in the sense that Thomas Jefferson meant it.
Right. Yeah. So yeah. So you work, you grow, you better yourself, you climb the income ladder, but from that subsistence level up to like the very bottom of where you might begin to think about middle class, each step that you climb, there's a material clawback, right? So you sort
Right.
of, it's two steps forward, one step back, which from an incentive standpoint is very discouraging, I'm sure, but just from a structural standpoint, just makes it that much more difficult to go from subsistence to a threshold above precarity, right? Just like
Yep.
structurally, there's too many hurdles in front of you. It's got to be just exhausting and discouraging.
Well, it's exhausting and discouraging, and I'll also tell you candidly, it's often unproductive, right? I mean, many people, myself included, who have children who move to New York, they encounter realities that you wouldn't even think about. Most investment banks, when I was graduating from college, would actually give you your signing bonus in advance. The use of that signing bonus was by and large to facilitate your move to New York City or Boston or wherever you were going, right? Because it does
First and last
cost
month's
money
rent, et
to set
cetera.
yourself up, right?
Yeah.
Now, most of those investment banks and programs will actually make that part of your second paycheck. And perversely, it's because it's easier, right? We have more complex forms for HR onboarding. We have more things that have to be filled out. We have more challenges associated with compliance, et cetera. And so it's more dangerous to effectively create 1099 type checks in the form of advanced bonus checks that would facilitate that move. But what that also means is you can't take those jobs unless somebody is willing to lend you that capital to make the move.
Right.
Right. And so, that would be a perfect example. I'm sure there are tons of highly qualified individuals that could go to work for Goldman Sachs. There's nothing uniquely talented and skilled about the individuals at Goldman Sachs relative to much of the rest of the population that is competitive for those jobs. Right. These jobs have 1% acceptance rates on top of universities that have 4 to 5% acceptance rates. The simple reality is that that's not really a merit uh, level. There's a component of luck, right? And people understand that and
Of course.
recognize it. Were they in the right place at the right time to identify the internships that lead to the jobs? Did they have parents who knew to tell them to look for these things? Did they have friends who knew to look for these things? Did they do it with their friends to make sure it all turned out better? Did they know how to write a resume properly? Did they go to a school that had an elite career planning and placement service, right? All of these are the things that determine whether you end up going to Goldman Sachs, not your innate brilliance. The people that work at Goldman Sachs, I've worked with many, many of them over the course of my career. They're among some of the smartest individuals that I've ever encountered. Very talented, very capable. But you know what? The people at Jefferies are too. And the people at Morgan Stanley are as well. And the people at Fidelity and Vanguard are often in that category as well, right? There's tons of people who could basically pick up and slot and place these people in different roles. And that's one of the reasons why investment banking programs get to be so abusive. Because the reality is, what's a kid going to do? Complain about working 110 hours a week when this is now the path that could set you, to actually escaping that precarity. Because that's where they are, right? They're 22 years old. They're making $130,000 a year. They're already there. Their parents have given them everything. They're there. But it's that other component also that I think often gets lost, is that it's not just the stress of those who are under that 140 and 150. And I think their stress is the single most important. But also face the reality of those that are in the 150 to, let's say, probably 400 range, where the reality is they can save for their retirement. They can make their lives better. They can add richness to their children's lives. But their children are increasingly competing for a smaller and smaller subset of opportunities relative to the population. And so they engage in all sorts of antisocial behavior, right? I'm going to cheat and hire a consultant who can get my kid into XYZ school. It's only going to cost me $100,000. Right. Well, most people look at that and they're like, I can't even imagine spending $100,000. I promise you it happens. And I promise you it happens at 20 times that amount.
Mm-hmm.
Right. And we shouldn't deny those people that opportunity, but we also should be realistic about it and say, wait a second, if it costs me $2 million to get my kid into the elite schools that allow them to begin competing for a life that looks like mine, we got to be much more realistic about the barriers that we're putting up.
Yeah, for sure. I mean, I don't want to lean too heavily into trying to cultivate sympathy for newly minted.
No, please don't try to cultivate sympathy for me. I want to be very, very clear. I've been incredibly fortunate, and I wouldn't trade my life for anything.
Yeah. So aside from maybe restructuring that valley of death, from a tax incentive and structure standpoint, what are some other sort of broader policies that we might think about in order to alleviate some of the stress at that precarity line?
Well, I think this is again one of these wonderful things about existing in this point in time, because we've introduced degrees of freedom that were previously unthinkable. Tariffs can be a very important role, right? They are effectively a gatekeeping access to the citizens that you want to sell your products to. If you introduce tariffs, then suddenly companies don't have the same threat of, oh, I'm just going to move, right? If you raise corporate taxes, I'm going to move offshore and then I'm going to sell and you're not going to get any of those taxes. No, you just create a differential tariff that says if you have a U.S. entity that is importing stuff from abroad, it's a 10% tariff. If you have a foreign entity that is importing stuff from abroad, it's a 30% tariff. It's a really easy solution to that, by the way. You simply have an incorporated subsidiary in the United States that pays some employees in the United States, pays taxes in the United States, et cetera, right? And allows you to avoid that 30% tariff. Not hard, eminently doable, right? Why do we refuse to do it? Because candidly, we're caught in this corporate grift framework, right? This corporate capitalism that you were identifying before, that's basically saying something along the lines of, well, this entity paid a lot of money towards my reelection. I got to look out for their interests over and above those of the citizens that I ostensibly represent.
Yeah. So, I mean, I'd love to be able to sort of end on some kind of direction of, there are ways forward, there are decisions that we can make, there are actions we can take that would help us kind of take steps in the right direction, right?
Yep.
I certainly, I agree with you that what we have is kind of a state that has been to a very large extent, captured by an overdeveloped corporate sector. And at every decision point, we seem to sort of leave citizens at the back of the line, right? Um, are there any degrees of like realistic degrees of freedom that we can point to that
Again,
would?
I actually think that's what's exciting is that we've reintroduced degrees of freedom that are really quite powerful, right? So tariffs play a very important role if you have capital mobility, right? This world of free trade, et cetera. John Maynard Keynes and any number of others have pointed to it and said, hey, wait a second, you can't actually have open capital accounts and open trade accounts. That leaves you subject to other countries deciding not to engage in that behavior, in which case they actually are determining your industrial policy, not you, right? It's a cop out to turn around and say, oh, we're just going to do free trade, right, with anyone who wants to, without considering that there are systematic strategies that can be made by other countries to impoverish their citizens relative to their productive capacity. That's what China is doing. China is artificially suppressing the wages and incomes of Chinese who would otherwise really like to acquire things from around the world and gain experiences in travel and gain experiences that we've heard over and over again echoed from within China, not Western observers saying, hey, we'd really like these people to have this, right? These are revealed preferences inside China that are being suppressed, right? We wouldn't accept work that was produced under true slave conditions if we were made aware of it. I'm somewhat skeptical that that's entirely true for some of the members of our society. But broadly, I think that we would agree we don't want to buy things that have been produced by slaves because what you're actually doing there is simultaneously devaluing the productive capacity inside your own country while participating in the devaluation of another human being, right? You have ways to address that, and tariffs are one of those tools. Trade barriers and trade standards and trade agreements are other ways of handling that. But you can't abrogate that responsibility. And that, if you know, Adam, you know me well enough to know, like that's the thing that drives me the craziest about the environment that we're in right now. We abrogate our responsibility for selecting our investments for retirement. We abrogate our responsibility for the selection of our politicians saying, well, the two-party system, what am I going to do about it, right? We abrogate our responsibility for raising our children in many situations saying, well, I don't really have a choice, right? These are criticisms that are leveled from the right saying you're making bad choices. That's true,
Right.
right? But we got to provide people with the tools to evaluate those choices. And that, Adam, is why I'm truly a capitalist, because at the end of the day, price is the mechanism of information exchange in a capitalist economy. We should be doing everything we possibly can to identify and provide those pricing signals to allow people to make choices, right? It's those choices that actually demonstrate true revealed preferences. If I don't have a choice between left and right, if I have to go right, that's not a revealed preference, that's a law. And things like EBT plans and SNAP plans, et cetera. And you hear lots of people say, well, what we should really do is have, a box. And then in this box, there's an apple and a banana and a peanut butter and jelly sandwich. And everybody who's poor gets a box, right? Like, well, that's absurd. What you're actually doing is stripping a capitalist system of the information of what these people would actually like to do with this money. Maybe they don't want another peanut butter and jelly sandwich. What you're actually doing is creating prison conditions under which people get things from the dispensary so that they can trade them for things they really want. Right? It's just silly. I don't know why so many people who have the knowledge to express it in this way choose to hide from that.
Well, so this may be a point where you and I actually differ, or at least I'd be interested in having you clarify things for me, because my sense is that one of the big challenges is that we have, over the last, let's call it sort of since Reagan, we have chosen to um, we've chosen fiscal stimulus via giving money to people rather than making direct investments, right? We've got something like a $5 trillion infrastructure deficit that, if we continue on the same plan, will be a $9.1 trillion infrastructure deficit by 2032. We've got decaying schools and a decaying educational architecture. There are all these different projects that we could invest in. We could invest in a universal childcare that's like delivered instead of giving people money to pay for childcare. One of the challenges of giving people money to pay for this or that is that as humans, we're not very good at deciding what we want to consume now versus what we need to, invest in order for our lives to be better in the future, right?
Yep.
And so, like, I would argue the state needs to be quite a bit more interventionist in terms of like investment rather than subsidization to build out the basic architecture of a good life, because it's just hard for people in the moment, especially people who live at or below the precarity line, to be able to focus on the long term versus the short term, And if you provide universal childcare, that frees up an enormous amount of budget space at the household level for them to rechannel that income to other places, right? That frees up degrees of freedom at the household level. So I would argue that we've got a major imbalance there. If anything, the balance should be toward more investment rather than putting more money directly in people's pockets.
So that it is a point of difference, right? And I would specify that this is actually where a discussion of the genuine poverty line becomes important, right? The crisis line, the level at which you can't feed yourself, at which it would be irresponsible for you to ultimately say, hey, I've got this kid and I can't get adequate food. I can't get adequate shelter. I can't put them into a safe situation, et cetera. If that's the level that you're at, I tend to agree that there is a component of paternalism that takes some of the cognitive load off and says, okay, here's the budget, here's the housing, here's the food, here's, all the things that are necessary to pull you out of this crisis component. But the minute you're out of that crisis component, I think you face an even more important cliff, which is, well, maybe I would prefer to have my wife stay home and take care of my kids. And in exchange for that, the end result is the same. I get a better educated, healthier kid who's going to become a more productive member of society. But you need to actually set up a system of incentives associated with that. So I'll give you a really simple one, right? The earned income tax credit, why that is not linked to academic achievement, or more importantly, academic performance and growth, where my kids' grades are better this year than they were last year. Their competence on tests is higher this year than last year. Their nutritional quality is better this year than it was last year. If you create a system that rewards people with those incentives, once again, not every individual is going to benefit from it, right? There will be people who try to exploit the system, and part of the job is to make the system not only robust at this moment, but on an ongoing basis. That's part of the process. But what we should be doing is creating incentives for doing a good job of raising your children, not for having kids, right? Like, think of it as a simple one. Your kid doesn't go to school. Your kid has terrible, attendance records. Well, then, no, we're not going to give you as much money. As a matter of fact, I'll tell you what, you only get 20% of your EITC, right? If you do a better job or you ask for help, we're going to help you. And we'll try to get you to the point that you're performing. But what we're trying to do is raise healthy kids, not give people money.
Yeah,
Right?
for sure. I
Giving
mean, I
people
just
money
think
is
that
a tool in that process.
I like that. And I mean, obviously, those seem like, and I know we're not mapping, final policy proposals here. I mean, directionally, I think that incentive architecture makes sense. I don't think the two are mutually exclusive. I think
Well, we know
offering.
incentives matter, right? I mean, if there's one thing,
Do we? Because I
sorry,
mean, I would argue that the U.S. health system, certainly the conservatives would argue, well, no, private healthcare. You need private healthcare because it sets up the incentives
what
for
is the
providing
objective of
health,
the
blah, blah,
U.S.
blah.
health system?
No, I'm just saying, like,
Right.
the
What is the
theory is
incentive
there's
of the U.S.
incentives
healthcare
to be
system? Is it
healthy.
to provide a service or is it to provide an outcome? Right.
Yeah, sure. That's fine. But how
But
you
we
set up
actually
the
know
incentives
this. We
obviously
know
matter.
that if we actually charge people less, I will reiterate what I have said many, many, many times. The amazing thing about capitalism is I don't have to come up with a solution. I just have to pay the person who does. And so the reality is what I want to do is create conditions under which we identify, here's the objective, raising kids who excel in an academic sense and are prepared to be extraordinarily productive members of society when they finish school, right? And by the way, we've created paths for them to begin learning how to do that as we go forward.
Right.
I should be willing to pay the private sector individual who figures that out. Right? I mean, it's the same approach that Napoleon took towards creating the innovation we call canned foods. I'm going to pay a ton of money. I'm going to create an X Prize equivalent and give it to the private sector individual who figures out how to can and preserve foods.
Yeah. So I mean,
Right?
on
I'm not
this,
going to
actually,
have a whole
we're
bunch of government scientists sitting around in a lab trying to figure it
totally.
out, because what they're being paid. But
Yeah. Sorry, there's a delay, so it we keep
so,
getting.
I'm sorry. You go for a second. I'm just going to listen.
Yeah. So I think actually we're closer than we're surmising, because the idea of kind of like
Yeah.
let's have society create a mission. We want to create it, incentives and an architecture and services to upgrade child welfare, child development, child achievement, right? Go, right? Private sector, go, right? That to me makes a ton of sense.
Yep.
We want a private sector response that makes us more resilient in the face of future pandemics. Go. I think there are elements that there are roles that the state can play here, and there are roles that the private sector can play. And where possible, you want to hand it off to the private sector to solve it. And where you can't effectively do that, the state needs to play a larger role. But in general, I think we're on similar pages. As long as we're agreeing the state needs to play a role by setting objectives and potentially setting up incentive architectures to achieve those objectives.
Well, this goes back to, again, and one of the frames that I tend to use is that we've lost a lot of the wisdom of our elders, right? We have a lack of appreciation for economic history, or how it developed, what the discussions were, et cetera. John Maynard Keynes has the famous expression, practical men who fancy themselves exempt are slaves to some defunct economist. We're all kind of trapped in the Milton Friedman world at this point, where we just presume that the knee-jerk reflexive reaction is government can produce nothing good. Well, government can create manifest destiny, and government can create the articulations behind the Constitution, the preamble of the Constitution of the United States, or the Declaration of Independence, or the Emancipation Proclamation. These are things that can only be done at a societal level. You have to basically agree that you're going to decide that you stand for something. And that's, I think, really the thing that most people really struggle with today. What do we stand for? Right? Do we stand for grifting grifting politicians who are enriching themselves at the public purse? Do we stand for nasty discourse in the public square? Or do we stand for people who are genuinely trying to build something together? And I'd like to believe that it's the latter still.
Yeah, me too. All right. Well, listen, we covered a lot. I bet the conversation is going to continue to evolve on this thing, and there'll be other objections that are worth covering, and you'll write more stuff. And so, thank you. Thanks for, being authentic. Thanks for writing the article that you wrote and sparking this conversation. And I hope it takes a constructive turn and it helps to nudge us in a new and better direction.
I will tell you, the single best thing that has happened from it is actually seeing how people are suddenly waking up to the conditions. It spurred conversations between boomers and Xers and millennials and Gen Z, who are all actually starting to talk about these things. The number of people who sent me messages that said, we literally distributed the article to every member of our family and talked about it at Thanksgiving dinner.
Amazing.
Man, that's an amazing gift you gave to me.
Yeah, no, that's tremendous. Incredible. Love it. All right. Well, thanks again, Mike. Really appreciate your time and your sharing your wisdom, and look forward to next time.
All right. Take care, Adam. It was great talking to you again.
I did want to take a quick second to remind our listeners that the team works really hard on these podcasts. We spent a lot of hours trying to get the right guests, and we do a lot of prep work to make sure that we're asking the right questions. So if you do have a second, just do hit that subscribe button, hit that like button, and share with friends if you find what we're doing useful.